Welcome to the Assay TV. Today, I'm very pleased to be joined by Martin Valdes, Head of Private Equity at Resource Capital Fund. So Martin, thank you so much for joining us here today.
Thanks to you, Amy, for taking the time.
Absolutely. And so maybe we could just start things off by, you can explain a little bit about Resource Capital Funds and your role there.
Sure. Resource Capital Fund, or RCF, we're a mining-focused private equity firm. We literally pioneered the concept of raising capital to specifically be invested in the mining industry. That was back in 1998, so 27 years ago. Since then, we have raised around 5 billion. We have done over 230 transactions through the life of the fund. So we have a long track record, 50 plus jurisdictions, 30 different commodities. So we pretty much have a lot of expertise in the different commodities, and obviously a lot of expertise in critical minerals. That is one of the trends right now. My role inside RCF, first of all, I'm a partner and I run the private equity strategy. Private equity is our flagship fund. So this is fund that we invest in, or we focus on the latest stage part of the cycle. So it has to be pre-feasibility onward. So we're a very active investor, and that's PE.
Okay, great. And so, what sort of criteria do you use to make a decision or assess what makes an investable project or an investable company? Are there certain key criteria that you use?
Yeah, that's a very good question. Obviously, it's always a risk-return type of analysis. And I guess obviously there is no investment without risks. So we need to understand those risks. We need to see how we can mitigate them, and then we need to analyze what is the return potential and compare that obviously with other opportunities that we have at the moment. What are the main risks in this industry? Technical is one of the main risks. We are, a big part of our DNA is our technical expertise. So we spend a lot of time trying to understand, again, what are the main risks from that side. And each commodity has its own risk. Since we focus more on the latest stage part of the cycle from the private equity strategy, we leave aside the geological risk. So we invest in companies that at the end they already have the reserves. Obviously, we analyze a lot what is the exploration upside in all of those investments, but essentially we're working with already a reserved in there. So it's very important again to understand if we're building something, how we can actually get our fingers caught. At the end, different commodities, they have their own sort of areas of focus. For instance, rare earth is more on the metallurgical side. If you go into base metals, it's about the execution of building something. So again, an important part of our analysis is on the risk side, on the technical side, sorry. And then, the other thing is mostly about the people. Who is the management that at the end will execute this project? Mining is all about execution and people. So that is a very important, again, area of focus for us, and an important sort of value added that we bring into the investment that we do is we help companies boosting their management teams, the boards, and getting ready again to go into that execution. So I think, as a summary, is mostly again that risk return analysis. What is the investment thesis that we're playing, and again, what are the main risks and how we can mitigate them.
Absolutely. And looking at risk, geopolitics seems to be kind of a huge topic for the industry today. So how do these types of, the geopolitical factors influence investment into this sector?
Yeah, more than a risk, I would say it's an opportunity. We're true believers, again, around energy transition. And when I talk about energy transition, it's mostly penetration of EVs, electrification, decarbonization. And more than energy transition, I think now is more technological improvements or advancements. Now it's about robotics, AI, and all of that. But what is the other main trend in the mining industry, and why the mining industry has become so dynamic, I would say, over the last 3 or 4 years? Because again, all of this conversation is quite recent, is around that geopolitical factor that you were mentioning. I mean, at the end, every single government somehow they want to secure the supply of some of these critical minerals that at the end will make possible this whole energy transition, and that is playing a huge role in the mining industry. We have a lot of conversations with different governments, with OEMs, and all of them that really trying to see how they can secure again that supply. So it's definitely a huge trend right now in the industry, especially around these critical minerals.
Absolutely. So you mentioned kind of speaking with various industry players, and especially the OEMs who seem to be taking somewhat of a greater role within kind of the investment space, with especially in the energy transition kind of industry. So can you talk a little bit about, the role of private equity in this sort of kind of funding model, and how you see that evolving moving forward?
I think private equity will play a fundamental role in the next 5 to 10 years, especially around the energy transition thematics. I mean, this is an industry. Mining is obviously a very capital intensive industry. It takes a lot of time to develop a project and requires, again, a lot of capital and a lot of technical knowledge. And there has always been two sources of funding, if I can put it in an easy way. It's either the public markets or again, let's call it the private markets, which somehow one way that people refers to that bucket is smart money. One trend that we have been seeing, and this probably has been more 5 or 7 years, a lot of the public markets, the retail money is going away of mining and going into other industries. I think, probably started with blockchain, then it was cannabis. I think the most recent probably opportunity has been around Bitcoin. And obviously, a lot of those public markets, they have been drying up. So for a lot of these mining projects to continue advancing, they have been relying on private equity. I think going to your point around how do we see the OEMs and also governments, I think they're playing an important role. I think everyone recognizes that mining is a very technical industry. So if you're going to play in this part of the equation, you need to have that technical expertise. You need to have that track record. And from the RCF side, again, that's very embedded in our DNA. We have built over the last 27 years, actually, a platform that allows us to execute on our different investment theses. And essentially, a very important vertical of this platform is our in-house technical expertise. So I think a lot of the conversations that we have, again, with OEMs, governments, sovereign wealth funds, when they said, look, I really want to actually take advantage and participate in this upstream and also midstream part of the industry, they would rather actually do it with someone actually that they have already deployed significant capital in the industry. So I think private equity in that obviously is playing a huge role. First, providing capital to the industry, but more importantly, guiding a lot of this new money that is trying to come into this part of the cycle and making sure that at the end they are picking sort of the right projects, the ones that at the end they can be built.
Yeah, absolutely. And so, looking a little bit back on kind of the geopolitical factor, there does seem to be a growing focus on the mining industry on kind of investing across the metals value chains, especially within kind of the battery or the critical minerals. So, is RCF kind of taking that sort of stance of looking across the value chains as well?
Yes. As I said before, again, geopolitics is playing a huge role, or is one of the biggest trends that we see. And it's mostly, again, that supply of critical minerals and hopefully that supply coming from the western side of the world. a lot of the refinery processing, or let's call it midstream, part of the cycle is in China. And again, that's what a lot of the Western governments are trying to somehow get access to Western supply, so not rely that much into what happens with China. So we're following very closely that trend. I mean, for us, midstream has always been something that we have done. Essentially, every upstream project has its midstream part of the process, either copper or gold or rare earth. So it's not something new for us. But definitely we're trying to analyze a little more again, what are the opportunities on those more niche type of critical minerals, and how we can play again an investment thesis around some of them. And I think in a lot of them, an important part of the opportunity set that we're seeing is mostly in that midstream side that you're referring.
All right, sounds great. And so just to close things off, do you want to wrap up with some kind of final thoughts for the year ahead? So just kind of opportunities and investment outlook, essentially.
Yeah, absolutely. I think, let me start saying that we're incredibly excited of what is coming ahead of us. I think we're finally having a lot of tailwinds in the metals and mining industry. So we're seeing again that this excitement. I'm just coming out of PDAC in Toronto this week. I went to the floor on Sunday. I was really glad to see a lot of companies, a lot of people walking around. So I felt that actually, and that's, I think PDAC, it's a good temperature of how the market is seeing the industry. So I would say we're really, really happy to see again the sort of the tailwinds coming into the industry. So what are the trends, or what are the key opportunities that we see? Is mostly around the energy transition, again, these geopolitical factors. From our side, we're putting a big focus in looking in opportunities in these commodities, and again, we believe that there is a lot of upside coming in the next 5-10 years. So we're trying actually to play private equity. Our view is more 3-5 years ahead. And again, we're picking those commodities that we believe that they will be absolutely needed in that time frame.
Absolutely. Well, that sounds great. And, we'll definitely have to catch up again in the next couple of months to see, how things have calmed down in terms of geopolitics. And yeah, so looking forward to kind of another catch up with you soon, Martin. But either way, thanks for joining us here on the Assay today.
Thanks to you, Amy. My pleasure.
Thanks.